Let's turn our attention now to what is happening in the oil market. Let's go to Chicago and the CME. Joining us from there, Bob Iaccino, Path Trading Partners. Bob, one of the things we've seen over the last few days is a pretty strong bid in oil. Bloomberg wrote a piece a little earlier on suggesting that thus far the rally we've seen in crude has been fundamentally driven and the speculators aren't in. So the big question is, what's going to get them in?
Well, I guess that's a good way to look at that article, Guy. Getting them in has to be an extension of the price above 60. We're seeing it fail through 60 right now. But I think part of it is that speculators are afraid that the demand weakness story is real, that the potentially a global recession is real. And if that's the case, it doesn't really matter whether the production cuts are extended, because demand can fall off a cliff, much to the effect of not being able to boost prices with those production cuts if you're getting 10, 20, 30% less demand due to economic weakness. So it really is, to me, about some of the trade tensions and the trade talks between specifically the U.S. and China, ratifying the USMCA, getting a deal done with Europe, and actually getting those sort of engine of global trade greased so that that global movement of crude oil can continue to push prices higher.
Bob, we're getting really strong demand for Govy paper around the world. We saw a 10-year Bund auction today in Germany. First time since 2016 we've seen that with negative yields. We saw the 2-year auction in the United States yesterday. We've got a 5-year auction coming up. Demand incredibly strong at the moment. Is the market, though, getting in front of its skis a little bit? Is this demand a little too strong in your mind?
Well, I think in my mind it is. However, over my 25 years of doing this, the bond market tends to be more correct than pretty much any medium to long-term indicator that we can see. So I would like to see yields rise before I'm ready to step away from the idea that global demand can't be spurred quickly. That's one of the problems, is the trade tensions have now spilled out probably 1 and 2 quarters forward. In other words, even if we get a deal now, it's not going to make its way into the economy for a good quarter and a half, 2 quarters.